Welcome to Trading Nation. I'm Courtney Reagan. Well, the recent sell-off sending a number of stocks in the Dow into correction territory. Let's check out some of the names. Intel, Apple, Caterpillar, Pfizer, all down around 10% from recent highs. Then there's P&G, Exxon, Chevron, IBM, Merck, all down sharply. And of course, GE, that's been a Dow downer over the last year. Combine those stocks taking $258 billion off the Dow since its high on January 26. But do you buy any of them here? Joining us to talk about that is Larry McDonald. He publishes the Bear Traps Report. And Matt Maley, he is with Miller Tabak. Thank you both for joining me. I'm going to start with you, Larry. What a week it's been. It's certainly not over yet. A lot of investors looking for some advice here on where to go, what to do. Are these lows that you're comfortable with? Do you think we're taking another leg down? Is it time to buy here, Larry?
Well, for names like GE, Exxon, and Chevron, I think the three of those are very, very strong buys. They've really had dramatic underperformance relative to the market. And in the case of GE, you're talking about a once every couple of decade management change where the new management team has gone through a cleansing process of the ML regime, which has created some surprises and has created some more downward pressure on the stock over the last couple of months. But the capitulation score that we get on the oil names in GE is one of the highest buy readings in our model that we've had in the last couple of years. So GE, Exxon, Chevron, all are buys in my book.
What do you think, Matt? Are you thinking that they're buys here? What about some of the other names we talked about? P&G, for instance. We got an activist involvement there with Nelson Peltz. IBM, that's another company that we focus on a lot. Are these buys at this point, or are you still a little cautious, thinking we could be taking another leg down and we're not done yet?
Well, it's always hard to know exactly when the bottom will come, and I think a lot of people talk about whenever you get a big sell-off like we just had, you usually get a retest. But, you know, looking at the charts of some of these names, of the ones that are down 10% or more, I agree with Larry that the Chevron and Exxon look particularly enticing, but I also like Intel as well. This one's been an interesting one. If you look at the chart, the stock has made a series of nice higher highs. Now, however, it's had some negative news out, some of these issues that it's had to deal with in the last couple of months. But each time the stock has sold off, it hasn't made a lower low. In fact, it's held that kind of 42.5, 43 level. So it's been nice support for the stock. Also, each time it is reported, the last two times anyway, it's reported, it's seen a nice gap higher. Whenever you see, a real positive response to an earnings report, that's always positive. Also, obviously, Intel is still one of the more important semiconductor stocks. And if you look at the SOX Semiconductor Index, the 100-day moving average has been incredibly important support ever since the election. It's bounced off it multiple times. Sure enough, in this week's downdraft, it went right down to that level. Actually dipped slightly below it, but was able to hold. So that's another positive thing. So on a technical basis, Intel looks pretty good.
Larry, energy names really got hit hard, particularly with some of these market routes here. And Exxon and Chevron, of course, part of the Dow. We've seen the underlying commodity. We saw crude oil prices get hit with the latest inventory report. What should we be watching here for some of these energy names? Have they been oversold?
Yes, high capitulation, a very strong score. But more importantly, Courtney, for 2018, we have a very, very interesting dynamic developing because over the last 18 months or so, 24 months, it's about $1.5 trillion has gone into this passive asset management, risk parity, bond stock allocations. A lot of money in bonds, and as the bond shock is now moving yields higher, which triggered this latest sell-off, in environments like that, going back over the last 30 years, energy names outperform, and so you want to be in the oil names, you want to be in gold, silver. Those are the names, commodities, energy that will outperform in 2018.
Gentlemen, thank you for joining us today. You've given us a lot to chew on. Larry McDonald and Matt Maley. Appreciate it. Thanks for being with us on Trading Nation. I'm Courtney Reagan.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.